I still think the dollar has a pretty strong support level around this 106 to 105 handle. If this is it though, like if this dollar does not hold at 105 and this thing comes all the way back down, I could see the stock market, Nick, going to all-time highs with some momentum. Like, my big concern for 2025 was that the dollar gets stronger and the 10-year yields rally, and they go kind of hand in hand. That's going to put a chokehold on growth. And yet, if the dollar gets weaker and the 10-year yield goes with it, I can see the market is looking at like there's more money to be made in equities because all of a sudden yields are down, bonds are up. Like the appreciation of bond prices is one thing, but the yields going down just makes like fixed income a little bit less attractive.
Yep. No, that makes sense. It can reverse course, right? That relative attractiveness of bonds can erode away if you get the weakness in the dollar. Yeah, no, dollar's been interesting. I mean, you've had a little bit of a crack in momentum, I suppose, from the recent kind of undefeated uptrend. It's a different price action chart than it was, a few weeks ago. So we'll see. I mean, there's a lot of beneficiaries if you do get a weaker dollar. Bringing me to metals. Gold's been running up like crazy. This has been a really strong move so far this year. I mean, this too, yet again, everybody kind of forgets about gold. It's up, it's not up as much as the stock market, down 3.8%. But at one point here, let me see if I'm getting this right. At one point you were up about 5%. So I don't know, silver and gold, do you think they have a lot of upside this year, or do you think, they'll have more of a consolidation type or even down year?
I don't know. I think that the simple thing is, look, I've got bar counts on the S&P, bar counts on the Dow, bar counts on gold. I think you can't get too excited when we've had a bar count that starts here, still goes, it's 300 plus bars. And also this last little run since we blew through these highs, this is up like 14%. That little stretch from December to now is up like 14%. Once we blew the highs off, I just think that 3,000 could be the psychological number. Maybe it struggles to get there. Maybe it pulls back before it gets there. But there's something about a consolidation window, I think, based on the time of this. Either we consolidate before, I don't know, either we keep moving to hit a psychological number and then we have like a nasty snapback, or we consolidate and pull back to find some type of dynamic support before we head up. And again, I would be shocked to go another like 50 to 100 days without finding this 200 moving average. And that's what I think about a lot of stocks. I mean, if there's stocks that have bar counts of 300, 400 plus bars, I don't think that stock has a ton of directional play without finding some dynamic support. Like I said, the only thing I'm missing is like the why. Like, why would it pull back? Why would the SPY pull back and find the 200 moving average? Why would gold pull back and find the 200 moving average? Why would Meta? I mean, Meta has had another crazy high bar count. This one, it goes even further. This one is another one that is now 500 bars away. And if you remember not too long ago last year on NDVA, the other stock that nobody trades, NVIDIA, that I looked at this bar count and I said, we're probably going to find a 200 moving average. And I said that once we hit this high and retested it, I was like, look, we've still gone 400 plus bars. I thought as we made this high, I kind of made a statement like, we're probably going to see the 200 moving average before we hit all-time highs. And we faked out like to the exact point of that all-time high, and then we dropped and had DeepSeek news and everything else. But ultimately we did have a why, call it DeepSeek, but this technically did what I expected, which was we were 400 plus bars overextended in a way and kind of imbalanced, and yet price pretty much stayed within that range, found the 200, and that was a perfect spot to buy it. I mean, if anybody was even paying attention to NVIDIA, buying this thing at 120, 119, 118, whatever price you can get, you love that trade. When this thing came down to the 200, I did ratio spreads, I sold puts, I bought some shares, and I also did some debit spreads, and I'm closing profit on a lot of those right now. So
I did the same thing, Chris. I mean, I did a little simpler for more options, beginner friendly style, but I sold a whole bunch. I sold 2 different puts, 2 different levels, closed one of them out, and I've got one still running that I'm looking to close. I've got shares that I own and covered calls. I got fancy with NVIDIA. That's pretty fancy for me.
Yeah.
Covered calls, naked puts at the same time. So
market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
No, I like the thesis there, right? You know, when you get this really long stretch, whether it be stocks, gold, doesn't matter. Just keep it so silly simple, and just think like when something has run really hot for a very, very, very long time, it doesn't take much to kind of disrupt that and very quickly a return to normalcy. I mean, we saw that big August 5th sell-off, and no, it didn't turn into, you know, a stock market crash, but look how quickly it reversed down. This was, I think it was a 16 or 17% move on the NASDAQ in just a few weeks. So I agree. Like the concept of like trying to, I know what's going to cause the NASDAQ to drop again like that. I'm not going to try and claim I know that. Could be a number of things. Could be tariff negotiations sour. It could be inflation someday. Like I could see the market doing what it did with DeepSeek, where DeepSeek came out in on Christmas Day, I believe, and it took a couple weeks before the market panicked about it. Like I think inflation could do something similar. Like, inflation's in the threes. Who cares? And then one day everybody's like, inflation's in the threes. You know, that's the way markets work. They can be very erratic and sometimes just switch their attention drastically. So I would not be surprised if something comes out with the Fed. That's what we saw, that big sell-off when we were on stream together, Chris. It was like the Fed just signaled a pause, right? They just signaled a pause, and that was enough to get the market to drop in that circumstance by 4% in a day. For the NASDAQ, proceeded to go peak to trough, a 7% pullback, nothing huge, but for the NASDAQ, that's something. So I think that being patient here this year is wise, because in the last 2 years, Chris, here's something I think a lot of people have learned. A lot of people have learned in the last 2 years: don't be patient, just buy. And that mentality has actually worked phenomenally in the last few years with equities.
Dude, it's worked great for the last 6 years. It's worked fantastically well.
Yeah, and it won't always. Like it does when it does, and then it won't always. And people who are patient will, I think, get rewarded in the end. Because here's the other thing: if you get rewarded doing that, what happens is you okay, I'm going to do it again, but this time I'm going to do it with more leverage. I'm going to do it bigger. And then the day it breaks, you lose everything.
Yeah. The biggest concern is the day that the Fed can't backstop the market and actually have it show the signs of a bottom. Yeah. That's the biggest concern is let's say, and again, I don't know what that's the thing is I don't know what the catalyst is. I do wonder if, this year it's everyone is so bullish on the market. That's the one thing that's kind of weird is we went from climbing the wall of worry all of last year into post-election, everybody's bullish. Most exposure from households in equities, pretty much on record. Financial managers and the Bank of America management survey showing most managers are crazy exposed and 60 to 70% bullish. Oh man, I just heard this crazy statistic over the weekend. It was something I don't know if it was a traders conference or a financial advisors conference, but basically going into 2024, only 8 to 10% of this group said that we were going to have a positive year in stocks, and we obviously had a good year in 2024. Well, this turnaround, it's 60% of that group is saying we're going to have a great year in stocks. And so the sentiment is just almost pinned bullish. And I'm a little alert, I'm a little concerned by that. And the one thing going into this last week, I'm curious how this prints, but I totally missed this as and I wouldn't say I missed it, because there's nothing about a 4% correction. There's nothing about this to me, Nick, that says, okay, we poke the all-time highs, we pull back about 3%. And there's nothing about this that shows a 3% pullback attached with an AAII sentiment survey that says this is the bottom. Yep. Right? If we were down, 10% again or 15% again, then sure, I can get a little bit more of that contrarian indicator to say like this is more of a good indication of a bottom. I mean,
I totally agree.
Yeah, like when we talked about this area when everything was down, and what did I keep looking at? How many stocks are below the 50 period moving average?
Yep.
Right, or how many stocks are above the 50 period? It was down to like only 10 or to 12% were above the 50 moving average, and like historically that's been a really good indication of a buying opportunity, and it was. So that was a good buying opportunity. And we also had like a nice healthy correction. This was down. I mean, the S&P at the very end of the year had about a 7% correction or so, 5.5%. I think the Nasdaq was 6 or 7%. So 5.5% correction. My point is this. I mean, this was a 3% correction, and we had like the 12-month high in bearish sentiment. I'm like, that just seems a little extreme to call that a bottom. And it's like, so is the market buying on like it's the pain trade?
Yeah.
Make everyone think that everyone that's bearish right now is just going to get hammered by. You got to get bullish because we're going to rip to all-time highs. And again, even two higher inflation readings like CPI and PPI, they weren't just like mildly hot. Like they were freaking, like they were scorching inflation. But then I was reading like, well, this might mean a lower PCE. I'm like, I don't know how the hell that math works. How you can have higher CPI, higher PPI, and then expect the end of the month that like PCs is going to be crazy low. I don't get it. But Chris, it's not enough, man. It's not enough to break the market.
Yeah, I mean, that's the thing is you mentioned that, and I love that point that you made just about the AAII Investor Sentiment Survey here. I've got it pulled up as well. I don't know why, I just prefer it in a vertical form. But
yeah,
the bearishness, right? Peaking out for the highest level that we've had in quite some time.
12 months, right? 12-month high.
And here's the difficulty thing. I actually agreed with what you said so much there because, okay, I would typically agree with you in the sense that that's a contrarian bullish signal. But with markets at all-time high, it's like, I take that with a grain of salt. Well, this is why I like when I look at sentiment, looking at across the board sentiment too. Put to call ratio, really interesting chart here as well. Shows something a little different. Put to call ratio, people cannot stop buying calls right now. When this chart goes very, very low, for the audience who's new to this topic of put to call ratio, that's just the options market volume of puts versus calls. Specifically, we're looking at S&P call and put volume. Well, call volume is off the chart, right? It is really, really high. People are very bullish in the options market. So I think that what we can take away from that is, markets at all-time highs, put to call ratios telling you that people are very optimistic in what they're actually doing. The sentiment survey is a sentiment survey, right? It is a survey. So I almost take the put to call ratio a little bit more seriously because this is actions. Sentiment survey is people, kind of in their sentiment about it. And like, if you ask me how I'm feeling, it's different than what I'm doing, right? So very interesting to think about that. I would say that people are very, very bullish on the market. The sentiment survey is still worth considering and looking at. But I would agree with you. It's probably more interesting when the market is actually selling off, like a confirmed kind of down move into bearish sentiment peaking. I'm going to start writing puts and buying stuff I like. But right now, I can't really justify doing that. And I just think that there's too many things. Market expectations are very high. You had hot inflation on the market ripped last week. It's not making sense to me. So I'm just going to wait. Like, there's nothing wrong with just saying, I can't. I'm not a buyer here, and that's not going to fit in with my plan here. I'm going to wait for the right setup.
Yeah, and that's probably going to be most of my year, to be honest. Like, I'm still going to keep that 40 to 45% cash at the ready. I mean, there's a couple stocks that I'd be pretty interested in. Tesla, for one, we've had a pretty decent correction. I mean, we're down 33% from high to low here. It's obviously off those lows slightly. I think Tesla has a good opportunity to kind of show some accumulation and basing around this like low 300s, maybe like if it's not done yet, maybe Tesla gets to like 275. 275 to me is like a no-brainer level. I got a bunch of ratio spreads where I'd be willing to take some ownership. But if we start to kind of V bottom on Tesla and all of a sudden we're coming back to the highs again, well, then there's a ton of money to be made there in Tesla.
US stocks have actually underperformed other places. And do I think that US stocks are going to underperform from here the rest of the year? No, I don't. I typically do heavily favor US stocks, as I have for years. I am of course American, but it's not just my bias. I mean, the whole kind of world tends to favor U.S. stocks. In fact, a lot of the U.S. stock market's investment is foreign, right? There's a lot of money that comes into the U.S. to buy U.S. companies due to the high kind of pro-business culture that we have here, innovation, development, growth. A way of comparing German stocks to, or not German, but European stocks to US stocks is that European stocks are typically more like value centric. It's a lot of banking. It's a lot of kind of stable type businesses. Whereas the US is like Silicon Valley, growth, technology, innovation, which is like the high risk, high reward stuff in the markets. So of course, in the last 2 decades or whatever, where you've had a ton of demand for risk on primarily, of course, the US stock market has greatly outperformed. In fact, I'll show you that outperformance, and it is remarkable. Let's do S&P 500, and what we'll do is we will compare this. We'll just add onto the screen. We'll compare even the DAX, which is, a strong stock market. But if we take a look, what you can see here, let's go out to a weekly chart. Let's just go back as far as we have data for this. This is going back since 2018. You can see the outperformance is pretty substantial through this period. DAX has actually held up pretty well. We could compare this maybe to like UK 100. Let's just do this, see if that, you can see, look at the difference there. If you had bought in this same period, go back as far as here, you can just see the substantial difference in returns. Now, again, I don't necessarily think that UK and DAX and all those and the Nikkei, I'm not saying those things can't also perform, but I would typically take the preference of buying that innovation heavy stuff as long as conditions are still okay. And there is going to be a time, guys, where things change a little bit. That dynamic where growth maybe takes a backseat to value at some point. We've had a really hot run in the stock market. Can I see the chat? I can, but I am very up here right now. Like, we're going through charts and thinking, so I'm very slow on the chart, on the chat. So I'm not ignoring you. I'm just I apologize. I'm just going through my Monday morning routine here of going through a lot of charts. So let's just take a pulse check here of where we are. S&P 500's at all-time highs. There's been some discrepancy here, or some things that I'm not a big fan of with buying these levels for the S&P 500 and the stock market in general. It was because last week, I would kill to have the Edge Finder right now. Is it loading now? Come on, give us Edge Finder. Nope. Oh, is it back? Google had a server maintenance thing or something this morning. It's probably still coming back to life, but Edge Finder will be with us shortly, I'm sure. But here's the thing. So a lot of the data that came out last week was not super favorable towards like massive upbeat, U.S. economy stuff. So we had like retail sales came in light. JOLTS job openings recently came in light. Not to say that that's all that matters, right? We had CPI that came in hot. Like, there's some things that are not super perfect for stocks. And I think stocks are priced right now to perform super perfectly. What I mean by that is that earnings expectations are very high. The economy expectations are very high. And granted, I'm a buyer of this market, but there's a time and a place to buy things, even when you're bullish, or if sell things if you're bearish, right? There's a couple questions that I always ask myself, and I talk about this frequently. What do I want to buy? When do I want to buy it? And why do I want to buy stuff, right? So or sell stuff if I'm bearish. But when I look at the stock market and I say, okay, why do I not want to buy it here, right? Why? The question why, the answer is, well, we've had a round of kind of disappointing economic data, and the market has still resiliently pushed back to the all-time highs. I mean, that's a really bullish price action signal. But for me, that would keep me on the sidelines and say, look, I'll wait for a dip, because we don't have all the right recipes for me to just be super bullish and pressing the buy button as we cross the all-time highs. I've got to either see one of two scenarios, and I've been a bit of a broken record on this. So if you watch every day, I apologize. You probably will hear me repeat myself frequently. It's trading 101 is a lot of patience and repeating yourself. But so as we hit this all-time high, if we do get a couple weeks of downturn and a pullback here happens, we kind of go range bound for some time, I may be a buyer at this level. Actually, I probably would be, as long as, conditions still look decently good, especially specific areas of the market that I like more than others. What would happen to get us there? Well, inflation was a bit hot. Tariffs, which initially were concerning to the markets, seem to be being shrugged off right now. Trump's commentary on them seems to be a little bit less urgent than previously thought, in the sense that, could tariffs still cause growth slowdown or inflation? Absolutely, they could. But it seems like the administration is not rushing to stamp them into existence right now. That was the fear, right? Right off the bat, a lot of people were very bullish about, pro-business administration, et cetera. And then people got worried about tariffs. And now what's kind of happened recently has been people are kind of more on the side of well, look, they're not stamping in 15 different tariffs all at once. Seems like they're negotiating with our neighbors, and there's not a rush to put out, and there's phone calls that have yet to happen. So again, I think that the big fear around Trump tariffs was they were going to come out of nowhere, give nobody any time to react, and boom, you've got tariffs, and it really disrupts the supply chain, causes big supply issues. And don't get me wrong, they could still have negative effects to the market. Again, I've been trading for a while, and 2018 was really ugly with tariffs. What can happen at any moment with this time around too is that relations and negotiations can sour. And if that were to happen, do not be surprised if you see a 10+% pullback in the stock market. In fact, we have a blueprint for this in 2018. And arguably, the tariffs that Trump wants to put on this time around are more aggressive. And in 2018, I've gone to this chart many times, we had a 21% pullback in the S&P 500 in a few short months. So my point is, if you're gonna have to watch that stuff closely. In my opinion, if you get it, it's a dip buying opportunity. But we'll have to see how those things go. I think the big one for us to talk about and to watch is China. Now, here's the thing. What's the market telling you about how it feels about tariffs right now? It seems like they are less worried than they previously were. You don't get a Chinese stock market rally like this if people are absolutely petrified of horrible tariffs. So it seems like the market's telling you tariffs may still be coming, but maybe they're not as aggressive or fearful as previously expected. I'm pointing that out. I'm not saying, it's all sunshine and rainbows. I'm pointing that out because that's what the market thinks right now. If something changes, you'll get drastic reversals. So we'll see. I don't try and predict that stuff. Tariffs are, trying to predict what Trump is going to say on the phone to President Xi is you can play that game if you want. I will not be playing that game, right? I don't know what's going to happen with tariffs. Generally speaking, markets are something I want to be long right now, but not at highs. I've got to wait for pullbacks. And if you get that pullback, the risk to reward seems a lot better for me. The DAX is absolutely ripping here. And from what I can find, it seems that most traders are attributing this big run up to the Russia-Ukraine stuff potentially coming to a close. Of course, we always make the point that regardless of your political views, regardless of what your thoughts are on how it happens, it would be a good thing from a humanitarian standpoint to see simply innocent people left out of, government wars and stuff. So if that does happen, the DAX potentially stands to gain a lot. My question to you then would be, does the euro gain some strength in that situation or not? If let's say that in the next, let's think about where things potentially are going. If there is resolution, what does that mean for the euro? What does it mean for Europe as a region?
This is not asking geopolitical experts, and yes, we are very much. If we hypothetically were to target for the month, and if we hypothetically, after today's meeting with the state heads in Europe, in Paris, with Emmanuel Macron, if they would agree to support Ukraine, this is going to have a very sharp fall, because that's not good for Europe. And as much as you want to say, okay, as much as we can say, yeah, this is good for euro. Euro has risen last week. This is good for the stocks. Yes, it has, but it's only on the effect of might be a possible peace. But if Europe, as what we are, I don't know if he's seeing probably some contour of, might step in militarily, which I haven't done before. That's an escalation of the war. That's a 180-degree move, and that will not. Then we will go back to, or was it 2020, 2022 on the DAX, and I don't think that is very positive. Around that time where Russia went into Ukraine, we had about 20% loss on the stock market.
Yeah, I mean, certainly, like, war is disproportionately like harder on Europe, since it's right in their backyard, right? You've got Ukraine right there, as opposed to the States, which you know, are farther away from that situation. So that proximity definitely seems to be both hurting when the war was kind of breaking out, and if there is, you know, rumors of positive developments in any way, it seems like the DAX is, of course, benefiting from that. And you mentioned, yeah, the euro saw a little bit of a bump off of this as well. So if we take a look at euro, you can see we're off of the lows, but it's not a super impressive breakout. I would say that, you know, the euro still looks troubled unless you start to really break out of some of these key resistance points. Do you have any trades in the euro specifically? Are you looking to short it? What are your thoughts?
Okay, maybe I need to educate a bit more. Europe nations want to put troops in Ukraine.
Mm-hmm.
That is war.
Mm-hmm.
That is not just proximity. That is actual. That's what they're discussing today.
Interesting. Yeah, I mean,
so that is an escalation of what they've done before. Just given them, what do you call them? Just give them, they're just giving them materials, ammunitions. Now they want to have humans on ground. So
that is okay. So now you've got kind of two stories there. So you've got the Trump and Putin sending each other love letters, and then you've got, of course, the potential actual mobilization, if you will, to use a vocab word, of troops and things like that. So yeah, I mean, it's an interesting time. I don't know. We talk about this stuff, Ivan, but of course, the difficulty of using it in your trading is very hard, right? Like trying to actually put together trades based off of it. I don't do that. I don't think you do that either, right? So like, what if we put that to the side for a second, what are you thinking on the euro?
So that is a huge risk to my trade, but I want to short euro dollar. I just need a reversal. Royal Trade says Europe will not get any army in Ukraine. That's what they're discussing today. That's what the news is saying. That's not my words. Second of all, we don't have a reversal yet on euro. So if that comes to light, that we have escalation in the war, 180 degree compared to what has happened last week, then yeah, I think that's going to have a very good push lower, and then I can trade. But right now, I am not able to whatsoever trade the euro dollar short. So I'm just waiting.
Sure.
Like you're waiting for your silver to go higher.
Yes, I'm begging and crying and hoping that silver goes higher. What else, Ivan? What other trades? Are there other currencies that you like more? What are your thoughts on the yen? Or actually, what is your chart of the day? If we had to ask you your chart of the day, what's your favorite one?
I don't think it's going to have a boost. Oh, sorry, I don't think it's going to fall, but you have not mentioned yet, so I can inform that tomorrow there is going to be an RBA meeting, and I think it's on Wednesday. It's going to be a RBNZ, so that is Reserve Bank of New Zealand, monetary policy meeting. So there's two, what is it, E-specific trades, potentially, if they come out and say, well, we're going to cut more. There's a 50-50 chance of New Zealand cutting double tomorrow, or on Wednesday, sorry. So those are kind of like, if they drop, if the Reserve Bank of New Zealand comes out bearish or more dovish than we previously thought, that'd be great.
Yeah, I mean, that's the thing, is a lot of central banks are cutting rates. So here's a question for you then. Do you trade the yen against the Kiwi or the Australian, or do you really specifically like the dollar over it?
I really disagree with the yen, with the dollar weakness at the moment.
Okay.
I got smoked, but no. Also, I think it can take. I've seen charts that can take up to 2 to 3 weeks before dollar goes bullish again after a higher inflation number, which happened about in 2022. So I'm still hopeful that we are going to go lower, but on the yen, I don't know, Mike. Like, this isn't bearish. Dollar yen is bearish. But that train was like Thursday last week, right? That was when we had the inflation number on Wednesday, or PPI probably, and then it went higher, and I'm like, okay, cool, this is not going to go lower anymore. And then it went lower. So that kind of entry is supposed to be around here. That never happened. So I'm supposed to short there. So I'm not in there.
Yeah, I mean, man, yen has been something to watch, and I'm frustratingly waiting for the Edge Finder comeback. I'm so desperately wanting to show off this new thing. If you haven't seen it, Ivan, we got Japanese economic heat map in the Edge Finder. This was, we should, you know what we should call this? We should just call this the Ivan yen heat map, because you're the yen man, and we know you love the Japanese yen. It's still loading, and we had this issue this morning. Google's Looker Studio was down, which is what the software is built on. But it's coming back, and it is being really, really slow. But I'm desperately trying to show this, because this is the one that's not loading, and it's the one I want to show you. Inflation and PPI, right? The CPI and PPI for Japan came in hotter than expected. That would make these things red to your request, because we listen to you, Ivan. Your ingenuity is important to us. But you mentioned that inflation came in hotter than expected. So these will come in red and red, and what that does is it shows you that the Bank of Japan has most of the remedies here. They have strong PMIs. We have strong retail sales, strong GDP growth compared to forecast. All the recipe for Japan to keep hiking rates, and for other countries, as you've just highlighted for us with the RBA and RBNZ, rate cuts. And that dynamic, I just wonder if maybe this is the year of the yen finally coming back a little bit. I'm not fully convinced, because again, we've got a Fed on hold, and I think that until the Fed cracks towards really cutting rates again, I think that the dollar kind of holds a placeholder. But I don't know. What are your thoughts on the yen? Do you think the yen has potential to move higher against the dollar? I suppose that would mean dollar yen moving lower. What are your thoughts here?
I'm really struggling with it, because you have that, and then you have the, what was it? Was it 48.6 thousand trillion yen they spent a month or something on bonds? So 48,600 trillion. So whatever that means. So that's supposed to be weakness for yen. And then the higher interest rates expectations makes it stronger. So I'm brain twisted. So I have said I'm yen strong. I don't know if I'm dollar yen week, also shorting the dollar against the yen. Because what do you mean when you say that Powell is neutral? But after that, we had CPI and PPI. Shouldn't that make you bullish? Because we went up to 3%.
Well, yes and no. You had we have to think about this again. I'm just going to do this without the Edge Finder, but it kills me to not be able to pull up the heat map. We had some stuff that slipped last week. We had retail sales came in light, JOLTS job openings light. We kind of have to think about, and for me with the dollar, I'm thinking about where we were a few weeks ago. We did also have hot inflation data from the previous round, and we had retail sales hot, we had JOLTS strong, we had everything strong. Now we're shifted a little bit. Yes, we still have hot inflation, but we've lost some of the other story. We've lost some of the JOLTS jobs and things like that. To me, I also think that the story is difficult right now because of what we discussed earlier with the tariffs, right? We just don't know where that's going. And tariff de-escalation is bearish for the dollar, as the market's been telling us, and tariff escalation fears are clearly bullish for the dollar. So I don't really know where we go with that. I think that the market right now has priced in like good news for tariffs. Like they're now starting to think like, oh, they're not going to be that serious or that. So I do worry that from a dollar bullish perspective, that tariffs could come out of left field again and start presenting some issues.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.